partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast number 343. This edition of Moving Iron Podcast is brought to you by TractorZoom. TractorZoom has access to over $20 billion in heavy equipment sales data. TractorZoom's Iron Comps is the industry's trusted solution for the transparent equipment values and auctionable pricing insights. All right, so we have Andy Campbell going to come back on with his breakdown of what's going on in the marketplace. We got four different topics that we're going to hit: combines, tractor sprayers, and planters. And as we go through that, what that looks like. Break this down to 4 videos. That way it's easy to digest. Each one of these videos will be 10 or 15 minutes long, won't be too long. But just kind of a high level view of what we see happening in the marketplace. So first off, we're going to start with combines. And, we've talked about combines extensively on this podcast a lot. Probably talk about combines more than talk about anything else. But when you're looking at what I see happening in the combine marketplace right now is, as I look at it, I see a lot of low-hourred machines. And I think a lot of that, too, is because so many machines got delivered late this year, October and November timeframe. Some of these machines might only had 50 to 100 hours on them, if they had any hours put on them at all. And they're going to come back through that trade cycle as we look through those. And we're going to see more of these machines here. I think the big issue that we're seeing, and I think this is the equipment industry wide when you look at hours, is that some of these machines had to have an extra year of hours put on them, or extra season of use put on them, whether it's a spring season or a fall season or a total, both entire years, both seasons for the year compiled together on that. But as you're looking at that, where you would see your typical 300 or 400 or 500 hour tractor, something like that, or your 300 to 500 hour combine or something like that, you're kind of skipping over that because some of that stuff didn't get traded in. And I think Andy's going to show some of that here as we're going through this and we're taking a look at it. We're starting to see a few more machines show up on lots. We're starting to see some combine values on the auction side start to slip down a little bit. But the values on the lots are staying flat as well. So we're seeing a little bit of parity there. You don't want to see auction values going down and dealership advertised numbers going up. So we need to pay attention to that. But I think as we take a look at this and we see all the things that are coming into play, the stuff that we've been talking on there about combines and in the equipment industry as a whole are really starting to kind of play out here a little bit. So let's check out what Andy has to say here, and we will go from there.
Hey, Casey and Aaron. I'm actually changing up the backdrop today, coming to you from TractorZoom's world headquarters here in Des Moines, and welcome to March. So we've got rain, we've got warmer temperatures, good basketball season. What we don't have a lot of are combine sales, but there are some nuances that I wanted to show you to see if this is what you're seeing out in your market, and see if you can provide a little context to this data. So looking within combines, what I'm seeing in the month of February and a little bit in January too is really 3 different stories. We've got class 5s and 6s, 7 and 8s, and then some new things were happening on with 9s and 9s and 10s. So when I dice up this data here, and I'm going to have 2 different looks that I want to show you, keep the focus on these combines. the 500 to 1500 hour range, the step hour range. And really, when we look into this, our class sixes down, class fives, you know, it looks up here in February, but really it's just volatility. We're not seeing a lot of those on the dealer lots anymore, and probably for good reason. Just the demand isn't there for something that's a little smaller like that. Class sevens on dealer lots, a little stronger. Class eights, the same. And really for auctions on class sevens and eights, we got a little weaker in February. Not a ton, just a softening of the market. So 7 and 8s, dealers strengthening just slightly on the price side, auctions decreasing slightly. And then we have category 9 and 10s.
So I want to talk about that a little bit on the class 7, class 8 combines, the two most popular classes of combines out there, the ones that are sold the most. If you go back and take a look at this graph that he had and kind of how those two things come together, if you look back there from, basically back from, this would be probably close to August or September, and is that you see that pretty steep rise in auction value prices, which you would see that during that time frame. Also, if you wanted to buy a combine, for the most part, during that time frame, auction was kind of the place to go buy it. Auction values during that time were rivaling the auction value or the retail values in the dealership lots, and we're seeing this. So I think, you know, we hit February. I think we just kind of caught our breath a little bit, and we're starting to see some of that normalize down. If you go back across here to January of 22, we are pretty close to the same value, that January, February, March timeframe. Value wise at the auction marketplace, we're about the same place. And if you see the similar pattern that happened last year, which a year over year pattern, this is not uncommon to see these kind of motions come through here. But as you're looking at where we're at, you can see where the combine market's peaked and what they had. So a lot of that stuff had to do with what was coming in and what was available at the time. So I think what we're seeing now is just some seasonality in the combine marketplace. I'm not too alarmed about that. I would say there are a lot of combines out there that are over $500,000 that I think we need to pay attention to. But ultimately, at the end of the day, this looks like a very seasonal trend to me. And until I see something further that shows a trend line differentiating from what we saw, you know, historical data shows, I'm not too worried about it right now.
Category 9 and 10s. And again, not a lot of volume out there, but what we are seeing, and one of the things I wanted to make mention of, is on the dealer side, on the auction side, we had 9. I think we actually had 1 Eakin late in the month and 10 sales on auctions in this class of combines. Back in August, we also only had 10, but it was the month of August. And so we're starting to see this show up a little bit more in the auction market. And I think that'll be an interesting data comparison as we get these larger combines to start to show in auction. But on the dealer side, in terms of volume, we saw about 20% less class 5 and class 6s combines move in the month of February as compared to last year. 7 and 8s, we are sitting right around 3 and 5%, so roughly about the same, maybe a touch more. 7 and 8s move this February than we did last year. But then on class 9 and 10s, in the month of February, we saw 30% more move this February than we did the previous year. So I'm going to cut over to iron comps here, and I've got one more look that I want to show you to get your guys' take on.
So let's talk about that a little bit, what we saw there on his. He's talking about class 9 and 10 combines. There's not that many class 9 and class 10 combines out there. Obviously, like you just said, I think the interesting thing on this slide when I'm looking at it is it shows what the average auction separator hour is and what the average dealer separator hour is. They're fairly close to each other, but they're about 150, almost 150 separator hours apart. There's still a lot of higher hour combines out there getting pushed through auction, and I think that we're going to continue to see that happen. Like Andy was talking about, he did see a little bit of a spike up from year over year and what that looked like. Again, I think that's going to continue to see that same pattern happen just because of what we see happen in the marketplace and how things are moving along with what some folks are doing. We're seeing a lot of retirement sales. Those kind of things are going to continue to move through the marketplace. So again, seasonality here. I'm not seeing a lot of stuff here that's jumping out at me and saying, hey, let's go crazy. I've read a lot of articles about combine sales in February and this compared to last year and how they're up and this, that, and the other thing. When you start out with 100 combines last year and you sell 200 combines this year, you had a 100% increase in your sales data, right? Still very small numbers that we're working with here. And I think that's the reflection that we're seeing here. I think there's the color behind some of these articles that I'm reading that have to do with huge increases in sales and this, that, and the other thing. You're working with a small number to start with. More machines become more available. Supply chains become less constricted, and we're seeing more machines show up. It's just math at that point. I still don't think this is anything to be crazily concerned about.
In February, we saw 30% more move this February than we did the previous year. So I'm going to cut over to iron comps here, and I've got one more look that I want to show you to get you guys' take on. Okay, I had to move my mug up to the other corner so you can see everything here. But when I drop into iron comps, one of the first things that I do, and here I'm looking at all types of combines, I just look within the past month to see what kind of price changes we're having. And I think the name of the game within the dealer side of combines is that it looks to be a little bit more of a return to normal. We're in March, springtime, people are just trying to move the remaining combines off the lot. And so big question out to you guys is, are you seeing the supply return to your neck of the woods? And are dealers essentially behaving more now like they did maybe pre-supply chain problems?
So I think the answer to that question is yes. We're seeing more supply nationwide. We're seeing more machines show up. You can look at any sales point data that you want to look at. More machines are coming to the lot. More machines are being traded in. More new machines are being delivered. So we're going to see more movement in that way. That looks like, you showed the numbers there a little bit ago, kind of what some of those numbers looked like as decreases and those kind of things. Again, I think if you go back and look at the seasonality of what we're looking at, the graph shows that. If you go back to the front of this and look at it, this is typically the time of the year when we see some values and stuff like that change year over in this time frame. And a lot of it too is guys are getting their inventories correct to move forward into a peak selling cycle, whether that's wheat, what that is, or what they're looking forward to harvest, what that looks like. And I think right now you're seeing the same thing on the auction side. Again, it's all seasonally adjusted and everything looks the same. Nothing to be overly concerned about here. But I think if you keep pushing forward and looking at some of the bigger picture here, what we're seeing here is, yes, we're seeing more supply hit the ground, but we're also seeing the same seasonal reaction to what we see happening year over year.
And our dealers essentially behaving more now like they did maybe pre-supply chain problems. And another thing that I always look at too are the price changes by hours and the volume that's listed by hour ranges. And the light blue here shows all combines in this past month and the different price changes and the directional price changes that we saw for these hour categories. And again, dropping down just a little bit on the 500 to 1,000 hour range. But the dark blue is last year. And so last year, with the tighter supply and kind of the uncertainty and what the demand really was, we're starting to see some price increases in these spring months for combines, which I imagine is a little out of character for this time of year. So again, this light blue is more recent. It's pulling downward.
So I think a couple of things to point out here. So last year in this time frame, most combine sales were getting pushed back and delayed. We had a lot of combines that were supposed to show up in the spring that didn't show up till late June, July, and some of the stuff that was supposed to show up in September, August timeframe, or August, September timeframe didn't show up till October, November timeframe. So a lot of these, some of that price spikes that you saw in this time last year had to do with, a guy needed to make sure he had a combine and he was going to get the one he wanted. So you could have saw some of that taking place there too. I think the key takeaway in some of this stuff though is if you're looking at some of this higher hour stuff, where we're at this year compared to where we were last year and how that's changed, I think that's a bigger story to tell. We got a pretty big differentiation here, slightly higher in that range here, but some of these are quite a bit higher, and we're looking at some higher price stuff here on the higher end as far as how much change we've seen in the overall market. But when I'm looking at this, there's some big areas that have had some big changes and big jumps. A lot of the stuff has been fairly consistent throughout the time frame. So again, I don't think there's a whole lot to be too concerned about yet.
Again, what we'd likely see when times are normal with combines. And that's largely probably because of this. Light blue, again, being the most recent time frame here. And this is distribution of combines listed across hour ranges. A little bit more what you would maybe expect. More sitting up at the 500 to 1,000 range, these late model low hours. And then that decreases on the dealer's lots as those combines get older and they kind of move away. But last year, we had this divot.
So I've talked about this a few times where you're looking at 21 through 23 and how the hour ranges are going to start coming into play and what that looks like and how those holes are going to start showing up. Not that there's a lot of people out there looking for 1,000, 1,500, 2,000 hour combines, but as you see those numbers have come down or stayed the same from what we saw last year. If you go from 500 to 1,000, we have a lot more of those machines starting to show up because I think we're seeing a lot more of machines that would have come in last year with 250 or 300 hours on them. That are coming in with 500 to 750 hours on them. They've gotten an extra season and a half or season of use or something like that. We're starting to see some movements now. We still have the same amount of the same struggle that we're going to see from last year to this year. If you look at the number of machines that have 500 hours or less on them, we've had a huge spike up in that one. And I think that has to do with the number of machines that we had delivered late that got put out in the field late. And we're seeing these less than 100-hour machines or 150-hour machines on the internet. I think that's what we're starting to see there. And I think that's going to continue to increase on the side. It's what's that washout cycle look like as we go through the cycle here. So
in the market with the lack of supply, that was causing some of that uncertainty and so those higher prices. And then another thing that I always look at, this average list price by hour range, just to see the year-over-year price change by different hours. So this 0 to 500 hour range, it's about a 19% year-over-year increase in the 0 to 500 hour range for combines. This 1,000 hour range, it's about a 14% increase. And that actually jumps up a little bit more again here to about an 18% increase year-over-year.
So I think again on the 500 engine hour or separator hour range, as you're looking at that, I think the 19% is very accurate. And I think that's a very, very much a true statement. And what's fueling that is these machines that have very few hours on them as you look at the overall spectrum comparatively to what they were used. I mean, there's a lot more really low hour machines out there. And it's not necessarily, that's not a bad thing. I think as you look at this, as I'm looking at it, I mean, this is a positive thing. When you start looking at some of these guys that are wanted the new combine, there's a lot of 50, 100 hour, 150 hour, 200 hour machines out there that are very well equipped that just are really good machines to be had right now. So to me, I'm not too worried about this. I think this is good. I think this opens the door to go back in and kind of come back up here and fill in this washout cycle. So we have a good flow of machines across there that are going to be in that less than 1,000 hour range.
February to this February on these 1,000 to 1,500 hour machine hour here combines. So again, I imagine a lot of this is price drag from the OEMs doing a large price increase last year. And then that minimizes and just becomes an X more like the used market as they get a little bit older. But this is what we're seeing across all of our combines. So if anybody has any questions, feel free to check us out at ironcomps.com, how we're helping dealers with valuations and trends. I look forward to sending you guys over some planter and sprayer, some more typical spring type data. Hope you guys are doing well. See ya.
All right. Thanks, Andy. I think that pretty well covers kind of what we're seeing happen in the marketplace. I think when you look around, like I said, there's some really large stuff out there that's driving up some of the supply that we see out there, and we're also seeing that sort of trickle through. But I think combines, I like I said, I think we're in a seasonal point. I'm not too concerned about what we see happening there. So, worst case scenario, we'll see what happens next month and the month after that, and we can start making some decisions as what we need to do in the marketplace moving forward from there. But as it is right now, I'm looking at stuff as a very, very seasonal trend line that we see happening here. So, combine selling season, and as you're looking into going into spring here, typically this is not this part where we're at here, late February and March, is not necessarily as hot of a combine selling market as from September through January. Typically that's when you see a lot of combine sell, and I think we're showing that, reflecting that in the marketplace. So I think that'll do it for this one. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to Moving Iron Podcast. Go to LinkedIn and go to LinkedIn and go to Moving Iron Podcast. And you can find me there. And you can also go over to the YouTube channel, which is the Moving Iron Podcast, and you can see the video version of this podcast there. So if you want more information about the Moving Iron Summit coming up here in Nashville, Tennessee, go to movingironllc.com and click on the upper right-hand corner. You get all the information about the Moving Iron Summit there and how to sign up for it. It's September 11th through the 13th in Nashville at the Hilton downtown. So if you want more information about that, you can send me email at movingironpodcast at movingironpodcast.com, or everything should be up there on the internet website now. So with that, I'm Casey Seymour. Smooth Smart, folks. Out.
Moving iron in the 21st century.